what was left over in my account, next week. So it gives you a peace of mind. It takes some of the stress off your head, off your shoulders, when you start planning exit strategies, and that is part of an exit strategy. So that is the first thing you want to do when you're investing, because this right here will tie into exit strategies. And I'm probably not going to cover that today because that's a whole nother video just on exit and entry strategies. But how much do you want to lose? What are your goals? That's the second question. Okay, are you looking to just buy and hold, a company or shares of a company for income? You're trying to create passive income off of this? Or are you trying to hold for the long term, over a span of like 20, 30 years? Are you just looking merely for value investing? So in other words, are you value investing would be like what Warren Buffett does with Berkshire Hathaway. They're a holding company, so what they'll do is they'll go out and they'll look for stocks that are undervalued. And I'm not going to get into that today either, because that, again, is a whole different topic of investing that we'll cover it, but not today. So value investing would be looking at a company, and let's say it's listed at $20 a share, right? But you think that the company is actually worth like $80 a share. Okay, there's value. You seek value in it. So what you would do is you would buy in at $20 a share because you're thinking, okay, it's going to go up. You're looking at stuff like price to earnings ratios, looking at their financial statements. You see the company doesn't have much debt at all. They've got a surplus of cash flow. They have tons of assets versus their liabilities. They're looking really good on paper, but their share price is really low. So, just based off your knowledge, again, up here, your knowledge, knowing, what you're looking at as far as an investment, it's worth value. So that would be value investing. And that's when you buy in really low on a company or a share that you think is just going to, it's going to skyrocket, go out the roof, by 30, 40 bucks in the next 10 years. So you're holding it. And what you'll do, it may not give you any income right off the bat because it doesn't have a dividend attached to it. But you're holding on to it because hey, I can make a ton of money off this stock when it does go up to that price, and I'm going to sell it then. So that would be your value investor. Is that something that fits your personality? And then the third one here is velocity trading or day trading. And that would be for people who are playing like the Forex market. If you're looking at doing some volatility trading with ETFs that are out there that measure volatility on the S&P 500, that's what velocity trading is. It's basically, you're buying in on a share price as it's going up, okay, in value through either headwind news that you're seeing on Google Finance, which is causing the price to go up, which would actually fall under fundamental analysis, like we were talking about earlier, or it's going up because just there's a big influx of buy orders, which is causing the share price to go up. So you're buying in as it's going up, and then what you do is you sell as it hits its peak and then it starts to fall. Okay, so those are day traders. Now, that's, again, these, hold on one second here. All of these follow a plan. It could be short term, it could be mid-term, long term, but they all follow a plan. And so that's kind of what you want to do when it comes to investing, starting out. So I'm going to erase this real quick. So the next thing that I'm going to cover with you real quick here is your plan. I know personally for me, here's what I do for my goals. And you guys can do this differently than me, all right? Because like I said, my way is not perfect. I, kind of as a disclaimer here, I'm not telling you to go out and do exactly what I'm doing because there is risk involved with what I'm doing. But I know the risks. I have a plan. I have an exit strategy in place. So for me, there's really not that much risk. Okay? And so you're with your goals. I'll get into risk here in a minute, but with your goals, you want to have short term, medium term, and then long term. Okay? So short term, what are your short term goals? Mine, for me, my short term goals, especially since I don't have a job now, were, okay, I need income. Okay? Now I've got money to play with already because I saved for a rainy day. I've got a good enough amount of cash to where I can use it for some of the things that I'm doing right now, which is volatility trading and some day trading with the Forex market. So my short-term goal for me was, okay, I need to create income like fast because I've got a cushion, I've got enough money to live on. But what happens when that money runs out? I'm going to need something that's accumulating money for me still after my money runs out. So my short-term goal basically was to, and I got this from a business owner at a conference that I went to last year in Indiana for my day job, which was information technology, and there was a lot of business owners there. So I talked to a couple of them, and I said, what's the best advice you can offer being a business owner, investor, he was investing in himself, what's the biggest advice you can give me as far as owning your own business? And you know what he told me? He said, make sure you have cash flow. He said, make sure that you have enough money to pay the bills. So, and I said, well, okay, how do I do that? He said, start 6 months in advance. So you've got a cushion, right, of cash. Start 6 months from the day you start investing. In other words, so like if you're doing short term like me and you're day trading, the money that you're making, your profits, okay, you don't have to use them right now because you have a cushion to live off of, okay, for like say 8 months, a year, or 2 years. So in that time, when you still have money to pay bills, what you do is you build a cushion, and it needs to be 6 months. So for me, mine was building a 6-month cushion with my profits. Now that was me, okay? Yours, again, is probably going to be a lot different than this, which is fine. But for me, it was building a cushion of 6 months with my profits from day trading. Now, my medium-term goal was to, and when I say medium-term here, I mean like within probably 2 to 5 years. Realistically, that's what I mean by medium-term. So within 2 to 5 years, I wanted to have enough passive income, okay, coming in to replace my bills, basically. So basically what I did, and the cool thing about this, with this medium term thing, my short term goals, right here, actually roll over into my medium term. They actually help with my medium term goals. So right now, with my short term, I'm making enough money to replace my bills right now. Now I'm not using it, so what I'm doing is just building my 6-month cushion. But once I get my 6 months up, my 6-month cushion, what I'm going to do is, again, part of my my bills. I have $400 in rent, and I negotiated a deal with the person I'm renting from, and we created a joint account for the both of us. So I've got $400 going into this other account, which is creating cash. It's got dividends in it with a few different stocks that we have that I picked out for us. And so each month I'm throwing $400 into this account. It's paying out money, but it's being reinvested through what they call a drip formula. And I'll get into that in a later video too, with dividends and drip formulas for creating passive income completely on autopilot, basically. So my medium-term goal is to create enough passive income to replace my bills. Well, I'm already doing that. So my medium-term is 2 to 5 years, you know. And so that's what I'm doing. I'm just taking money from my short-term goal, putting my 6-month cushion there, making sure I have 6 months at all times cushion. That way I don't have to worry about money. I don't have to worry about a job. I don't have to be freaking out, you know, because my money's running out. I'm prepared and planned for this 6 months in advance. So my medium-term goal is 2 to 5 years. Then you get your long-term goal, and your long-term goal should be like within like 10 to 30 years. So for me, my long-term goal is basically to, well, hold on here, I've got it. It's basically you know, I shouldn't even have to look at this, but sometimes it's good to do that. Write down your long-term goals and then go back to them, and they might have changed. So I like to keep mine written down. But for me, my long-term goal is to create enough passive income so that I've got all my bills covered, and then I've actually got extra cash flow coming in, which might be able to cover, say, like a mortgage payment. And the reason why I want to do that is because I want to get into real estate. And I had said in a previous video that I was looking at buying a house here in the next 2 to 5 years. Well, I'm not going to be able to do that unless either I go into debt, okay, which I really don't want to do. I would like not to be, you know, have to finance a house. If I have to, I want to have cash flow coming in off of my investments every single month, and I want to have enough there to cover the mortgage payment. And the reason why is because I'm planning on renting. Okay, I'm planning on renting property out to other people. Well, if I can't get a renter in to rent property, you know, when I buy it, and let's say I financed my mortgage, well, now I have a mortgage payment that I have to pay, and I want to have that covered in my plans. So basically what my long-term goal is to create enough passive income to pay my bills, okay, and then on top of that, with like my joint account portfolio that we have with my the person I'm renting from, I've talked to her. She wants to get into real estate eventually too, and I told her, you know, hey, let's go ahead and go into this together. You know, you could be a business partner. But again, it's long term. It's in the next 10 years. So what we'll do is take the money from the joint account, you know, it's creating passive income, and if we have to, we utilize that if we can't get a renter right offhand. Because I know, for example, we have a couple friends who are doing this, but they're flipping houses, and they had one of their houses, and they encountered the same issue that I'm talking about right now in flipping houses. They actually didn't even, they owned the house, but they wanted to get rid of it for a profit, so they tried to flip the house. Well, they couldn't find buyers, and so they're stuck with a house and maintenance fees, even though their house was bought and paid for with the cash that they had. They still had maintenance fees, and they had a lot of problems that arose like within the winter months, and they didn't have any buyers for about 6 months. So they utilized all their savings that they had, but they didn't have any passive income coming in. So once their money was gone, it was gone.